Good morning. Here we go. Another day in the trading range. Is this today? Is this the day that we can break out of this thing one way or the other, which appears maybe could be to the downside? There's some things going on here that would suggest that, but buyers have been stepping up here consistently at these lows. Looking at the S&P cash here just to start the day. And we'll go to the spiders and futures. But you can see the same gapping, red bar, no follow through, green bars, no follow through, up and down over the last month or so here. So as markets are kind of flip-flopping there, we've got our lines in the sand as far as an intermediate term view as to whether they can get above or below this range, and we'll just wait to see. It just continues to be within the range here so far. So we will watch this during the day and see which way things go. Spiders, same story. You know, the picture is going to be almost the same there. You can see how the 20 is just coming over the top of prices there, and at the angle at which it's dropping at just gives you a visual as to the consistency of the selling that happens at the top of the range after the break. And we've talked about, this big fast move to the downside, which implies lower prices, as this fast move to the upside implied higher prices. However, the uncertainty about that actually following through to the downside has become somewhat painfully obvious as every attempt to go down fails and every attempt to go up fails. So we'll just have to see how much follow through there is today. You can see things are a little bit negative. Some buyers did step up. You can kind of see it here on the spiders here, this little topping pattern that occurred. And as it came down, these lows, buyers stepped up to hold it there. Maybe it's a last attempt to hold before maybe testing the bottom of the range, or at least this day's low here. That's what I'll be looking for. See if that actually follows through. The Qs, same story, range bound, sideways in a similar pattern, which you'll see is a lot clearer when we look at the futures. Let's go ahead and do that. You know what? Before we do that, let's just look at the Russell here, which had the worst day yesterday. It was as the markets were hanging down at these lows yesterday and then began to rally in the latter part of the afternoon. The Russell had the greatest potential because it was the weakest and it just couldn't get through its intraday highs, and then obviously failed and came all the way to test the bottom of the range. You can see it's kind of just pushed underneath it a little bit before it started to turn back up here. But you can see the hourly's in a downtrend, the daily's in a downtrend, and the weekly is on the edge of the cliff here, ready to fall into the void or the abyss here where there's no support underneath it. So the only thing that could save this is either creating support or one of the other markets turning around at some point. And maybe, which is interesting, we'll look at interest rates here, that it appears that maybe there's a lack of confidence in what the Fed will actually do here, since short-term interest rates have started pushing higher over the last week, which you can see there's gaps here, but this is the symbol IRX for the third 3 month, and you can see how it's pushing up, and now you can see where it's at. It's actually above all the other yields, including the 30-year, which was the last holdout, so to speak, of short-term interest rates getting above it, and now those are below. Yes, they're trying to turn green. Yeah, the inversion is more about long end buying. Well, sure, but just looking at the and that's what's happening today, that it's continuing to push up and it's got room to go higher, which we'll take a look at. But the point is that the focus is, well, you're looking at more detail. The focus here is just the fact that it's inverted, and those that are looking at it are just saying, hey, historically this isn't a good thing for the markets, but they're just reacting to it on a moment-to-moment basis, which is something new for the markets versus I guess people that know, watching that and knowing that the lead time before something serious happening, a decline in the market is quite long. So things are kind of speeding up here where more people are looking at that. So we'll just see how this unfolds. But you can see this is the 3-month versus the 30-year, and is now finally pushed down below the zero line. So we take note of it just as everyone else does, and then we just see what the price action does. So in this case, do prices actually break down through this level of support and then go down to the next level, and we see what goes on there. And you can see the futures here on the 60-minute, this head and shoulders top, and that buyers have stepped up near the prior low. And as this is beginning to inch up there, you can see the action on the 5-minute. So W type of a bottom. You look over to the left, which you would do, or just look at this higher time frame to say, why is this pattern forming here? Do I want to take a counter trend trade at this level? And that's what we do intraday. Look at where patterns set up, the location as to prior support on a higher time frame, and then we know it's a counter trend trades. Well, maybe they come up to this area, and then we see what happens, because that's where the sellers are going to be. Well, NQs, same story. I've mentioned a few times that these patterns are quite similar in the markets, and that's not always the case. They're not always as similar as they are now. Sometimes one leads the other quite a bit, either up or down. And as you can see, the weekly is still just chopping around here. And so while things look sometimes pretty bearish or pretty bullish in the moment, you got to keep it in perspective that overall just nothing's happening here. Just a battle between buyers and sellers, and kind of give or take close to the middle of the range, and we'll see which way it gets resolved sooner or later. So I've marked off the 200 here on the Dow futures. Is it really going to hold anything at this point? I don't think so. You can see the void down below. So you just 25,600. There's nothing there to the left. And it's kind of just sliced back and forth through the 200 several times already. So I don't, no one's really respecting that as a reference point right now. As we always do, we look at a moving average and look to the left and see, is it actually in alignment with anything? And you can see right now, it's in alignment with absolutely nothing. So if the market should roll over from here, odds are it's going back down to the bottom of the range. So we'll see. We'll be watching that, obviously, this afternoon to see if it happens. Russell, already down there, but bouncing with everything else. Maybe the other market's just dragging it up. Oil pushing up here, up into this mess where, two big 2-bar 180 reversal, topping tail. Sellers are stepping up, but you could, the highs are getting lower, and now obviously we have a higher low. So kind of what it look is, coiling the spring to which way this is going to go. So maybe, excuse me, my voice is losing here. Maybe these things are getting tighter here as we come into maybe the end of the week or next week, that something is going to happen here where we've had this month of chop and where something's actually going to happen in September. A lot of economic news coming out tomorrow before the open, so we'll see what that might bring. But you can see oil as it's pushing up here as I speak is coming up into the top of this area where sellers have showed up before. You can see right there to the left. And bonds, which, they're pushing up here. Markets are on the edge. Buyers did step up at that support. We'll just see if it's for a moment trade, a counter trend trade there. If this continues to push up, I suspect the markets are going to break below the lows, because that's just what's been happening lately. So why should I or any of us really think anything different other than what's happened in the moment? And of course, we'll look at the price action to see what it actually does. And it's really that simple as to what we do. We look at the trend. Is it going up? Is it going down? Is it going sideways? If it's going up, is there a reference point to the left to stop it from going up? So as we look at the weekly chart here, as it started to go up, you know, I've marked off this topping tail, and might be a little difficult to see as I squish this here, as a possible reference point, which is also about around a whole number of 170 bucks. And then ultimately this high up here. So if this does accelerate higher, which, you know, it's already started to accelerate, but after a week of resting, it's pushing higher again. If this accelerates higher, well, then this pushes even further, you know, down toward inversion, which obviously the markets are watching closely and nervous about. Gold just hanging up here today, but it looks like it's going to go higher. Silver, surprisingly, yesterday, it accelerated to the upside in the face of that resistance. And what could be more bullish than that? To come up to a resistance area, go sideways, and then just push right through it, which says buyers are overwhelmingly in control and believe this is going to go higher even yet. So will these little points over here stop it? Well, none of us know for sure, but just based on the price action, it would suggest that by the pullbacks, look if there's another sideways consolidation, and expect it to go higher since gold looks like it's going to go higher. I only mentioned the TYX here, which is down here right near the prior low. And see it's gapping down. So we'll see if buyers want to step up there or not. And what else can we take a peek at here before we hand it over to Dan? VXX, kind of just the same message. You know, one of the things I said in the Telegram message last night was, you know, here we're closely monitoring all these intermarket relationships. And while we do that all the time just to see where things are going, we start to look at all these things so much more closely, trying to determine which way the markets are going to go when they're in a range like this, and kind of becomes, you know, a lot of work as the markets just kind of run in place. But ultimately, prices are going to break one way or the other, and that's what we're waiting for. And last thing, just take a look at is, you know, our internals, which really aren't giving us a heads up here. While sentiment is down toward this bullish level, you know, if this, it's really not at an extreme point down here at 1.2, which it poke closely down toward here through the bottom of the bands here, and sentiment had reached an extreme, and we got that bounce, which then just created this resistance area, and buyers created this support. So this isn't giving us any information here to say, hey, that support is more likely to hold because breadth and sentiment are already at a bullish level. So kind of a coin flip no matter where we look. Maybe bonds are suggesting it's going to break to the downside. Buyers stepping up here a little bit. So we will take it as it unfolds. And that's all we can do in a situation like this. So hope that all helps. And I'll hand it over to Dan. We'll see where things go today. Wait, somebody said, Greg, when you record your stats at the end of the day in your spreadsheet is very transaction trade. When do you add and reduce transact single entry data points? Howard, Dan updates all of that. And honestly, I know add points. I know Dan has mentioned adding at certain times. I don't believe, and what you're telling me has not been made official on those sheets. So it's a difficult thing to do for individuals to say that you should add and reduce, because everybody has their own money management strategy that they might use at that moment to put on any given trade. So kind of it's more of, you know, what I teach in the advanced, it's what I teach in the advanced money management course for individuals to use on their own. Some of these futures trades that we're doing more actively in the room now, I will do that and tell you to add to a position when and that may be coming up. If we break below this support level and there's that void, it'll make a whole lot of sense to add and reduce our stops in that type of a situation. But so you've got to have the structure of the whatever you're trading that would support that bias even at the beginning. To say, hey, there's this price void, there's room to run, and here's a new setup. Let's add to the position, raise our stops, and then, so if you've taken the course, how to do it and how we do it. So all yours, Dan.
All right, thanks. Good morning. Yeah, and all I do in the spreadsheet, 99% of the time, I would just say, hey, we're taking a half position here, and then I tell you when we're going to add, and then I just put in the average of the price. That's it. Or if something turns into a beautiful 1, 2, 3, and I can say you can add, no, I don't put a new entry in. I just let you all know that I like it. If you want to add it per your own plan, or you missed it the first go around, whatever the case.
In addition, just to add what Dan said, just using that comment as, from that course, the majority of people would have no idea what we're talking about, because the majority of people don't take that course as much as they should be the first course they take. It's not the course of the greatest interest. Everybody wants to know the patterns and the setups and strategies and the money management. The light bulb moment comes on a little later as to how important that is, and then they eventually take it.
All right, ATVI, we have a put spread. It, closed with a topping tail. It's holding neutral right here. This is in the weekly options trader. Our Facebook actually hit our Titan stop over this Monday's high, but we stopped out for a profit. Tesla, we still have a call spread, and looks like I can move the stop now to yesterday's high. And that's it. In the weekly, we don't have much inventory there. The swing trader, AAL, we're short, and I'll go through this morning, tightening up stops. We should just go into trail stop mode on that. Our AEM, we're long stock, that looks great. Actually, we're long a call debit spread, the 55.65. If that were gapping up here today, that would be a great place to take half profits. Cato, we're long stock, and that was an example where 2 days ago I said you could add to it because it was a beautiful 1, 2, 3. CNC, we have a bear call credit spread. I'll move the stop to yesterday's high also. CPB, covered call. We have a deep stop over here because we were holding it for a bigger target. EDU, put spread, showing some relative strength there yesterday, closing at the high. Ego is our other gold stock. EWBC, we shorted stock yesterday. That looks good. FLT, we have a put spread way out of the money. Like 280, 270. GNRC, we have long stock. Goose, we're short stock. Millennium, put spread way out of the money. The 240s way the heck down here. PVG, long stock, and that closed with a 1, 2, 3, 4. That's another example. Relative strength, that looks like an add over yesterday's high. But the only caveat to that is, yeah, I'm very iffy on the broader markets here. And pre-market, we actually have sell setups. They gapped down, they rallied, and there's sell setups on the 15-minute charts. Oh, you dig trader? Perfect. RNG, way out of the money put spread, the 1 130, 120, way the heck down here. And these look great. Look at the weekly, monthly, relative strength, made a higher high. SRC, or long stock. TDC, short stock. That's one we picked up yesterday. That looks great. Or maybe 2 days. TDC, we picked that up 2 days ago. So yeah, on the 26th. That looks great. Yeah, I left the keys at 5 a.m. and the traffic coming back to Lauderdale was absolutely insanity. So I didn't get a chance to update this spreadsheet, but I'll go through them and do it this morning. Vert, we're short stock. That looks like an ad under the low. WDC, that we have a covered call, but that's not acting well, and that stopped out yesterday. So let me close that one out here. And finally, whiskey, we added as a core trade yesterday. And yeah, it looks fine. You know, a gap from a bull flag, bullish weekly, monthly. Looks like it's gapping at 30 bucks, although I can't tell the volume. How is PVG a 1, 2, 3, 4? Sure. Well, a 1, 2, 3 is wide range bar, inside bar, upper third, and then the 3 is the continuation. So if we have 2 inside bars, we just call it a 1, 2, 3, 4. That's all. You know, you can have a 1, 2, 3, 4, 5, 6, depending on how many consolidation bars. But it's no biggie. You just trade it the same. But it's more bullish, right? Because we had a red bar. Now we have a green inside bar. So on a 15-minute chart, that's 26 bars that negated the red bar. All right, makes sense? Yeah, Autodesk here is in my gapper. You're going to short Autodesk at the open, Fabio. It's a big gap, so it's really too big for me, but it's a very bearish pre-market. So if I were to trade what I perceive as a gap that's huge, this is the only time I would do it. If it's a bearish pre-market, and then you get your bearish entry within the first 5, 10, 15 minutes. The gap, I don't know, trader. I mean, I can't give you a yes or no till I see what it does. But you know me, I'm not crazy about those excessive gappers. TIF was strong in the morning, and now it's 78. Wow, that's a huge. Can you imagine if this were the market open and it closed like this? I mean, just visualize it. You would have a bar up here at 86, and then it would be going all the way down to 79. That would be the biggest bearish engulfing bar in a long time. That's ugly. But, you know, it's excessive again. But it's worth a watch on a bounce. HPE 1345. There you go. That's 30-minute high. 30-minute high idea for a little day trade. TERP, we were watching yesterday. If it closed strong, I was talking about the multiple resting spots. And I actually prefer it, you know, to chop around here, to build a higher range base support. V 167. Now that is a put spread candidate, McGraw, because it's not gapping too big, and you have all of this support here. So that And it's a bullish pre-market action. So that one I like. All right, that's the one we shorted yesterday. I'm going to adjust this one down. Yeah, so now I can move the stop to high. Well, I'll give it another dime. So 39.52. Any other gappers you all want to take a look at? These were just left over from yesterday. Kate, I'm watching, is it short? Oh, Oscar was a long watch, but it's turned sloppy. SRC, we're in 9:30 here. ATUS, I was watching as a long, but that red bar ignored, but it left the station. Okay, Bert, we're in. ATVI, put spread. I got these on the other computer. Whiskey. Baidu. Hey, your KTOS still looks good. Yeah, KTOS over the week's high. WPM, it left the station. Bravo Kilo. There's a 10-15 minute short if it can't bounce. Oh, I see ATVI is not acting right there. Oh, my bad. Amazon is also open. This ATVI is whipping around. Let's give it 5 minutes before taking a stop. Yeah, so I like this BK. If the market can't